What is going on, everyone? Welcome to a new episode of Talk of the Town. This is a podcast where we talk about all things media, creators, startups, and more. My name is Tristin. I'm the host of the podcast. If this is your first time listening to the podcast, thank you so much for tuning in. And if you're returning from previous episodes, thank you so much for tuning in to new episodes. Today, we've got a really special guest for the podcast. Brandon, introduce yourself.
Hi, I'm Brandon Maier. I am the founder and general partner at LvLUp Ventures.
So, Brandon, first off, talk about what LvLUp is and what you guys do.
Yeah, so we're set up slightly different than your traditional direct investment fund. LvLUp is a mature seed stage focused direct investment fund that works closely with its founders, taking a roll your sleeves approach to really add value from anything from customer partnership introductions to helping them raise their next round. This is all attached to a multi-stage venture ecosystem where we take a bottoms-up approach to investing. We have a couple acceleration programs called Next Up and a corporate venture program through Spin Magazine called Spin Labs, where we work with companies as early as post product creation, pre-launch, and then up the funnel from that, we're operational partners with a large athlete syndicate fund called the Players Company, where we help to source deals for the athletes, bring in accredited investors to invest alongside them, while providing financial literacy to these groups of athletes that are learning about stepping into the world of investing into these Series A and Series B deals.
Wonderful. So, the first question I always like to ask is where are you originally from? What did you like growing up as a kid?
So I'm originally from Michigan. I grew up in the suburbs. I was a very nerdy kid growing up, so I spent a lot of time on my own, playing video games and um, not much else beyond school and doing that. It was probably moving out to New York and going to NYU where I started blossoming and coming more into my own.
So, what kind of games were you into as a kid? Myself as a lifelong gamer, I think, there's always a very, fun transition from, your first game to, video games that you end up playing over time. But, what were the games that you were playing back then?
It's always been sports games. I've been a huge sports fan, mostly basketball and football my entire life. So it was a lot of NBA 2K or NBA Live before 2K started really taking over. Um, for me, I wasn't a big like RPG game player. I didn't really like getting stuck in certain uh, levels or certain places and having that repeat cycle over and over again.
So, you mentioned you went to NYU. Why did you decide to go to NYU? Obviously, Michigan has the University of Michigan, but, why, NYU?
Um, I really liked New York, and it was between Los Angeles, where I'm currently based, and looking at USC, and being in the city. At first, the city was appealing because it was very different than anything else. And as someone that grew up a little bit more sheltered, it was still a somewhat quick flight back, which I rarely ever did go back.
Absolutely. So, what are some of the lessons that you learned or experiences that you had when you were at NYU going for your bachelor's?
Um, Experiences like just in general
Yeah.
that I had. Um, I mean, the interesting, unique aspect of going to school in New York City in general is it is not your typical landlocked campus bubble. You're exposed to New York City. So between being in a place that you could go out before turning 21, that it was easy to get into bars and nightclubs, also working in the city, whether it was part-time retail job while in school or having an internship and being exposed to all different types of people, learning all of the different types of areas. The city just had so much culture to offer. So it's more so, I think, going to a university in New York City or a place like New York City, it's really something where if you take full advantage of everything that's offered around you, it's quite the enjoyable experience, or it simply could just not be for that individual person.
Absolutely. And what did you study when you were in college?
Media culture communications.
Interesting. So why that versus like a business administration or like a finance
Because I didn't
major?
know what I wanted to do. And I think that when I think about school in general and putting the onus on a 16, 17, 18-year-old to make a decision of what they want to do with the rest of their life or where that degree can take them is kind of asinine.
That's fair. Do you think um your degree helped you get to where you are today, like in terms of like the things that you learned at NYU that have applied
No,
to? So why is that? Because like I know a lot of people um, tend to try and apply whatever they can, or at least take some of the lessons that they learned from college to where they are today.
yes and no. I would say that college has changed a lot. Experiential learning and having more hands-on applicable classes has started to come more to the forefront than it was when I was in school. Um, I think a lot of the classes that you're not choosing to go through in general, it depends what you're doing. Like,
Yeah.
if anything, I would say an English class or writing the essay as NYU has should be writing the email. It should be things that are actually applicable in everyday life or setting you up to actually enter the real world. There's several people that go through a 4-year degree and never do any internships, never get the experience outside of it to really have as much to pull from it.
Yeah, that's something I've certainly experienced a lot myself. I frequently talk about that I've twice dropped out of community college because it just felt like the learning for me wasn't the best, and even then, like a lot of these cultural studies or scientific classes that you have to take, it's like in a business environment, unless you're dealing in biotech or something of that nature, you're not really needing to focus on those things. Um, so I think that's a really interesting perspective that you bring. Um, do you think compared to back then that like college degrees are worth it for people these days?
I think it really depends ultimately, and it goes back to that statement I made earlier about it's a lot to put the onus on a 16, 17, 18-year-old, depending when you're graduating high school, when you're starting to really truly think through where you want to go to school and why. Um, it's it's a lot to put on someone to know the answer to what am I going to do for the rest of my life. Some people know it. Some people that think that they might want to go into a specific trade or space. But I think that as we grow as people, or as we go through various experiences in our life that help shape who we are, that those things get figured out along the way. Now, granted, there is something to be said about being in that type of environment around other um, like-minded people, or students from all different cultures, all different socioeconomic situations, where there's a lot to gain from the people themselves.
Sure. So, once you graduated from NYU, you built your first startup, which was Josie. Kind of talk about what that startup was.
So I actually worked in crypto initially before I started Jazzy. I was a financial controller in the pre-federal regulatory days of the crypto space for a Winklevoss Twins backed exchange, when the coin was fluctuating between $50 and 120. Um, I learned a lot during that experience on the whole startup world, raising capital, um, just different ways of seeing how things were operated. And when we were in the initial post-federal regulatory period, it became virtually impossible to get a bank that we could hold on to as an exchange. I was at an NYU career fair looking to hire interns for that exchange when I got a call that we were shutting down. So I, in a period of, I think, like 48 hours, really had to rack my brain around what did I want to do next. And naturally, what kind of came to mind, especially standing at that career fair, was um, doing something that was beneficial around sourcing college students and properly matching them to a given company.
Okay. So, what were some of the highlights of running Jazzy, and do you think that you guys achieved what you hoped to set out?
We definitely did not achieve what we had hoped to set out. I think for a lot of people, if they're not wildly successful or don't have some, I guess, a nice moderate exit from their first startup, it's something that you'll typically hear is a tremendous learning experience. And that's really what Jazzy was. It was this great learning experience that, if I look back at the version of myself then, I didn't know a lot. There's a lot of things that I kind of learned as I went along. There's a lot of things that, in hindsight, that I would have done differently. But just going through that trial and error that you typically do, and hopefully it's not as much on the error side. But I learned a hell of a lot that really, as an investor today, because after Jazzy, I co-founded a VC fund. I learned a lot. I gained a lot of respect for founders and all of the heavy lifting and juggling of different roles that they have to do, um, to really set me up on the investment side of the table. I also learned a lot about where the no comes from, or why it's a no, and the different things that you might be looking for from an investor side of the table.
Absolutely. From there, you had some, really interesting stops, along your journey. Noticeably being like a EIR for plug and play. Talk about that experience. Was it fun being, an entrepreneur in residence, and like, what were you building at that period in time?
Plug and Play was during my time at Quake as I was starting to think about what's next. I really resonated the first time that I talked to Plug and Play early in creating my first fund. It really resonated to me how differentiated they were in this space. It resonated to me how they would go about setting up a vertical, working with corporate partners, sourcing companies based off of what those corporate partners were, looking at. Um, the experience there was really interesting. It was, very different than your standard accelerator program, which is what I was coming from.
Absolutely. Additionally, one of the things that I thought was really cool about your journey is from the startup space to the investing side of the table is that you have had a lot of mentorship roles over the last uh, few years and worked in advisory positions, especially um, at like Tame Group, which I think is a really great company. Do you think that those advisory and those mentorship positions helped better you? And then at the same time, what were some of the highlights that you are sort of proud of from like the different um, stops and mentorship that you've had over the last few years?
So I definitely don't list everything. I think that I started listing stuff more so early on into taking those additional mentorship stops because I've done that at everywhere from Columbia at their startup program. I really like doing the mentorship piece at the collegiate level because I feel like there's a little bit more of a blank space. You have a much more positive outlook. I think we all, change with experience and age. So it's always refreshing to work with college students that are trying to spin something up new, or they're really passionate about their business to the point that this is the plan. This is my plan. I'm going to do this after college. I'm raising some money while I'm in college. I mean, I've even seen people go full fledged and leave school because they know based off that mean that's actually on the backtrack a little bit. That's what I mean, even from experiential learning and education. That's practical. Build something, figure out what you want to do. And I think, with startups, one of the unique things that they offer to a student, even if it's talking about the high school student, and just giving them the task of come up with an idea, figure out like a problem that you want to solve. What's the solution that you're going to run with? When you're creating the go-to market, does the marketing piece resonate to you? Does looking through the legalities, does that resonate with you? I think it gives you more insight into figuring out what you actually love.
Absolutely. And I think one of the other things when I initially like looked at your background is that you were a lead at Huddle, which is a company I'm very familiar with, and I've spoken with Stephanie before. I think it's a really great company. What was that experience like? Because with it being obviously like a global community type of startup, um, it's one of those that's something that we've started to see a lot of other startups sort of not I think duplicate but replicate in that same space. What was that experience like?
It's a good, I mean, Huddle is a nice offshoot of this growing trend of people not being landlocked into any one specific job. It's focused on all of these different tasks or projects for startups for the most part. Whether it's someone looking for a pitch deck, someone looking for marketing strategy, fundraising strategy, web design, building out an app. So it was a great experience. We'll still do some projects here and there with them, not as much as I would prior to launching this fund, but it's definitely kind of like an interesting offshoot of all of these, kind of gig economy and freelance jobs that you see today.
Absolutely.
That
Now,
encompasses all of these, various types of experience where it takes that community of people that have, various superpowers that can help fulfill those needs.
absolutely. Now, getting into Level Up, what do you guys invest into? What stages are you guys investing in, and what does things look like?
So for the most part, we are industry agnostic. We have a pretty big team. No one person on our team has the same uh, background or same experience level. So everybody has something different or unique to offer to the team. Uh, from an opportunistic standpoint, like we look for companies that are coming in with solid month-over-month growth. They're typically around 400 to 500K in annual revenues. Um, and we do that and we come in at that certain period in time, especially in this type of economy where it's over the past 16 months or so, it's been a lot harder for most startups to raise capital. Um, we want to make sure that the deal is as protected as it can be. And we typically come in with our investment towards the end of the round. That way, it's less so helping them once we come in on filling in the rest of their funding round, and we can get right to work with them on helping really amplify and accelerate their growth.
Yeah, and one of the interesting things that I noticed about Level Up compared to other venture funds is you guys have sort of built this ecosystem of different brands that sort of pertain to specific areas, right? Like you have Spin Labs, which is AI in music tech. There's the Seed Fund. There's Players Company. There's Next Up. Why do you think it was different for you guys, or better for you guys, to go sort of in this multi-branded approach versus just one collective fund?
So it's part of our multi-stage venture ecosystem where we actually give 30% more equity value to our LPs in a down economy, which is a very different offering than you typically see. From the brand approach to it, we didn't want anything to be pulled away from LvLUp or get misconstrued by these different verticals, which is why, or different properties, which is why they stand out the way that they do. Next Up has its own team. Spin Labs has its own team. The Players Company has its own team. But where it all kind of connects together is this bottoms up approach. We can work with companies at a very early stage for Next Up, for Spin Labs, and working in that acceleration model, we get to work a little bit more hands-on with them for a period of time where the hope is that 1 out of 4 companies will eventually be primed for us to make a direct investment from the fund. And the difference between the companies we might source currently for the fund or someone coming from one of those earlier programs is it's not spending 4 to 6 calls, speaking with them and answering, having them answer a bunch of questions. It's working very closely with them. It's kind of seeing them at their various highs and lows, and getting an understanding of the cloth that they're cut from. So from a standpoint of relationship building, having that additional confidence needed to know that this is a sound investment, I think that's one of the magic pieces or magic parts that is set up through doing Next Up and Spin Labs. The Players Company, we're a smaller fund, so we're a $15 million micro fund. Usually funds of that size are not set up to do follow-on investments. The way that you do a follow-on investment is setting up a syndicate vehicle. The fact that we have that partnership with the Players Company, where if we invest in the right company that would be primed for the Players Company up the funnel, then we can take a deeper position through that property.
So, talk about why you decided to create or partner up with Players Company. Is there sort of a thesis going into it of having professional athletes backing it and having some value add, or what was the thought process going into that?
And it wasn't really a thought process. It came to us because we have a venture partner who was formerly worked for the San Francisco 49ers, who became the president and co-CEO of the group. And there was an opportunity there to work with them, as they had tested the model and running some syndicate deals in the past, but now wanted to create a platform where accredited fans can invest alongside their favorite athletes and really build that out into a much larger community. So if anything, it seemed like a great opportunity. As someone who has always been a sports fan, that truly believes in their mission of protecting these athletes and setting them up for that next stage of life, because the average career in the NFL typically doesn't just stand for National Football League, it stands for not for long. Because the average career lifespan is about 2.5 years. And a lot of those guys that aren't the Patrick Mahomes, that aren't your Jalen Hurts, will go broke 6 to 12 months outside of the league. And at D1 schools, and I didn't learn this at NYU, actually, while doing Jazzy, we worked with some athletes at USC, and I had an intern who was a D1 athlete. No matter what sport you're playing at a large Division I school, you essentially work for that free education. You work for the school. You have 2-a-day practices, even if you're a swimmer.
Yep.
That does not give you the proper time to get a proper education. It doesn't actually give you, a lot of times does not give you the proper time to get that outside experience and take on internships in the capacity where you're really going to be able to learn and figure out what you want to do in that next stage of life. So everything that the Players Company was predicated on and everything that they stand for it's mission aligned.
Exactly. And just to kind of list a few of the companies that, like you guys mentioned on the website, the Players Company is invested into, you're talking brands like Zenwater, Public, which I'm a community ambassador for. You have Teamworks, you have BetDex, Syndicate, and I'm sure a plethora of others, which are
Robinhood.
Robinhood as well, which is a great company. good and bad. It's I think every brokerage has had its moments. To be fair, so this is the point in time in the podcast where I like to turn the tables a little bit and let you sort of act as a host of sorts, bring up any topics or questions that you want to talk about or ask me about. So the floor is yours.
That is an interesting way to flip it. You're a lot more prepared than I am in terms of just answering questions. But
Sure.
I guess big question for you is what drove you to start the podcast? How does that fit into your own entrepreneurial journey and where you see this going?
Yeah. So I mean, I've always been a fan of podcasts. Um, During the pandemic, I had started a podcast and I did decently with it. But I got kind of bored in the fact that like a lot of the bigger podcasts that you see out there, it's not just a one person show. It's like a 30-person team. Like, for instance, I'm a avid listener of Diary of a CEO from Steve Bartlett. It's a 30-person team that's doing all that work. It's not just him doing all those things. And I think a lot of people don't realize how hard it is to do a podcast where you're consistently bringing people on and having to scout and edit and do everything all on your own. Um, and I took a lot of those lessons from that first podcast, which was mainly just interviewing people in the business world and saying, like, what do I really want to do with a podcast that's different? And there were really two things. The first was that um, I introduced, like talking about current events on a typically like daily or every other day basis. And then at the same time, bringing in guests, but also with the added bonus that, like, what this segment's all about is where I feel podcasts have become so repetitive with people who are just asking a guest questions for an hour. There's no back and forth conversation. There's no authentic and engaging conversations when you're just sitting there and talking to somebody, and asking about things. Whereas getting to have a sort of genuine conversation is a lot more valuable and brings a lot of different perspectives to the table. Like I did a podcast recording with someone the other day where, we, during a segment like this, just talked about everything from like pop culture to where, trends are in different parts of wider culture today. So I think that's what led me to create this podcast. I think how it fits into my entrepreneurial journey is that I'm someone who likes to meet people and talk to people and build relationships. And I think if you aren't taking that initiative to reach out to new people and say, hey, I want to talk to you. I want to get to learn about you and your story, versus just, hey, trying to get into this industry and hopefully you can give me pointers and so that way I can leech off of you is, I think like something that doesn't intrigue me. So I think that's sort of where I'm at in my journey is, you know, uh, trying to just meet new people consistently and like not be sort of comfortable with just like, okay, hey, I've met these people and that's enough. There's always some person out there with an interesting story.
1000%. And I appreciate that answer, and I appreciate you having me on today. Sorry for any of the technical difficulties that might have been on my side because I don't get great service out here.
No,
But
you're perfectly fine. Um, So going along in the the podcast here, I wanted to get your thoughts on something that is sort of happening in current news right now, which is that there's legislation to update the um, definition of what an accredited investor is. Um, and I guess sort of a two-part question. One, have you seen sort of the basic talking points of that legislation, and do you think that it's a long time coming that the accredited investor um, requirements are hopefully being upgraded?
I haven't honestly seen anything around that. I always have to be mindful and careful when we reach out to people for our stuff, um,
Sure.
if someone's accredited or not, which I have a pretty solid rule of thumb, which is either sourcing people that have made angel investments or are investors in funds in the past, or hold certain executive roles at companies where you can see what the average salary is.
Sure.
Um, but yeah, I don't know what those changes are outside of the 200K in salary or assets to determine accreditation.
Yeah, I'm trying to pull it up here because someone shared it with me the other day, and so that way I can kind of give some better um, perspective or a better understanding. I've always said that I think accredited investor requirements, the way that it's been for quite some time, have always been really outdated. So basically, this is the big things: is that um, the statutory definition would include any investor that either does not exceed 10% of their annual income or net worth, and then also at the same time that it would or any individuals receiving investment advice from a licensed professional, so a Series 7, 65, or 82, would also become an accredited investor.
Interesting. So, I mean, I think that's still, I think similar to how the current law is anyway. There's certain aspects of that that aren't so easily tracked.
Sure.
Um, so honestly, I don't have too much of an opinion besides that I think the accreditation piece should exist, and it does exist for a reason.
Sure.
If anything, to a certain extent, it should be applicable to gambling a certain amount of money. It's what keeps you from being in a predatory situation. Like, obviously, to somebody that doesn't have as much, but they might have $50,000 stashed away or under a mattress, getting to invest alongside people that are millionaires, even if they're investing in something that might not be the best investment, that's kind of that, predatorial scenario.
Sure.
And the one thing that the accreditation piece somewhat protects is that scenario. Um, but outside of that, I don't really have too much of an opinion. I think that it's something that to a certain degree can't be properly tracked as well as it should be.
Absolutely. Now, one thing that I think is really interesting about Level Up compared to a lot of other venture funds out there is, you know, you guys have the Deal Scout program, which I'm a member of that program. I think it's a fantastic thing. Why did you guys decide to do that where it's open to everybody? And then secondly, um, do you think that um, more venture funds should do something akin to an open deal scout program?
I'm going to take that somewhat backwards. I do not think that necessarily more funds should do it. They should do it if they can do it in the right way. Part of what drove me to do it in the first place was when I would share deals that I have already invested in and would send it out to some groups. Sometimes I would get back some 1 page, 2 page contract like, hey, we're not interested in this deal, or this is a great deal. Do you want to be a scout for us? And that would be the extent of the conversation, the extent of the relationship outside of signing a contract that says I would receive some additional carried interest on the deal if it were placed. But it didn't go beyond that of giving, a lot of criteria, and a lot of those programs have little to no touch points where a lot of the scouts are in the dark. There's high turnover. What really led me outside of that to create the scout program at LvLUp is I created a similar program at Quake, my first fund, called the Collegiate Venture Program, that was fully focused on sourcing college students to become scouts, because I saw as many people as I saw looking to become entrepreneurs and build their first startups in college. I saw just as many, maybe not just as many, but I saw a lot of students that just wanted to be on the investment side of the table. And it's not the easiest industry to break in on the investment side, because there's not nearly as many funds, and there's definitely not nearly as many people working for those funds as you have opportunities with joining another startup or starting your own. Um, and one of the biggest pieces that I would see, or at least with other people's experience when going and trying to get to a fund, is what's your investment background? Do you have a portfolio? And obviously, for a lot of college students or a lot of people at a certain point in their life, they probably don't have that. So I wanted to create this layer where initially they could gain some experience, have something on their resume, and maybe that could help be part of the lead in to them getting their first VC job. At LvLUp, I wanted to take it one more level forward, because outside of the college students, you have a lot of founders that want to transition into this space. You have service providers that work closely with a lot of funds, with a lot of startups that want to find a way to get into this space. And knowing when we just did that for Quake Company specifically, I figured that we could pull in other funds that we could run deal flow for. We could acquire other scout programs and just take it over from a management standpoint, that we could create this program that was not just a scout program, but a low touch point educational program where, as you probably have experienced with us, the first Wednesday of every month, you can hop on this hour-long call. You can get background on what's going on. You can ask questions so that you have a better understanding about some of the deals that you're submitting, why it may have been rejected. We're building out additional tech components so that we can provide more transparency when a scout submits a deal and they can see where it is in the process. We're doing the same thing on the investor side, so we can provide more transparency so they can have, if for one person they're super busy, they can have other associates hop on and have the ability to review those deals. So we figured, I mean, I was really just driven by creating an opportunity for people to get more experience in the space, potentially build a portfolio, even if it was you're an associate at another fund, and this is a way to get some additional equity or through one of the debt groups that you can, make a little cash on the side.
Now, one thing that you touched on there is that college students, obviously, because they don't have that opportunity, or they don't have as much money as a traditional like angel investor. Do you think it's smart for college students to take advantage of some of these platforms out there, like a Republic or a WeFund or a Start Engine, to really build up a track record? Like when I was trying to break into venture 2 years ago, that's what I had a lot of people recommending to me was like, hey, either get into a venture program at your university, or do this and build up a track record. Do you think that that's a smart way for people to go at it and kind of dip their toes into the water, or do you think it's still a risky environment?
I would say learn a little bit more, because the big difference between going to, say, Republic or a platform where you might invest $1,000 into a convertible note or a safe round, the big difference then, if you decided to test the waters on crypto or on stock trading, is the likelihood of you hitting zero is a hell of a lot less than the likelihood of you hitting zero if you've never built a startup, if you don't know how long it's going to take to potentially capitalize on this pre-seed company, if you don't know what red flags to look for, it might literally just be like you're throwing $1,000 or $10,000 out the window. So I think in investing in this space, that is a good way to get experience once you have enough experience where you feel confident to make an investment on your own. But just going for that at first, if you're going in with a complete lack of knowledge or understanding, I think that's a little hazardous.
Absolutely, and I certainly agree with you. I think so many people get too comfortable with stock trading and crypto and then think, oh, I'm a DeFi type person. I know how risky and volatile things can be, and then getting into startups where 8 out of every 10 projects fail. It's different where, like, hey, if a crypto startup rug pulls, like, the token's still there, although it's of no value. But like when a startup shuts down, like, hey, that's it. You don't get your money back. There's no takesies backsies,
Mm.
so to speak. So going from there, one of the last questions I want to ask is, what are your goals this year and next year for LvLUp, and what are some of the things that you hope to achieve?
Goals this year and next year. So we're looking to close out the rest of this first fund by end of year. Going into, we're also exploring spinning out a couple more corporate venture programs with some outside groups. And going into next year, we're looking at starting to raise a $50 million second fund. So the table is pretty packed with a lot that sits on our agenda.
Wonderful. Is there anything that you want to mention that I haven't asked, or anything that you think should be talked about that I haven't asked you about?
No, I think you covered a pretty wide gamut. I mean, we went through my entire resume for the most part, so I think we can leave it there.
Wonderful. Well, Brandon, I appreciate you giving all the insights, all the knowledge that you've learned from your career. Again, I really appreciate you taking the time out of your day, because I know you're infinitely more busier than I am, and at the same time, I think a lot of people can learn from you and can learn from what LvLUp is doing, and how you guys are sort of carving your own mark in the venture and the investing ecosystem. So for those that want to see what you guys are doing, where can people check out LvLUp?
They can check us out at lvlup.vc. So it's levelup.ventures without the two E's.
Wonderful. Well, Brandon, thank you so much for coming on to the podcast. For those that are both listening or watching the podcast, thank you all so much for tuning in again to a new episode of the podcast. Really means a lot to myself, and I hope to have more amazing guests just like Brandon on the podcast. If you want to check out the podcast, all the social medias will be in the show notes down below, as well as our sponsors. Make sure to go check them out because they help to make the podcast somewhat affordable. So, with that being said, thank you so much for tuning in to a new episode of Talk of the Town. We'll see all of you in the next one.